Show me your crypto portfolio for this year. Should I be holding these coins in my portfolio? Guys, if you're asking these kind of questions on a daily basis, then in this video, I'm going to break down what the perfect crypto portfolio looks like and how you can build one. So do me a favor, hit that like button and let's get into today's video. Now guys, as we know, everyone recently has had a crack at building a 2024 crypto portfolio on their YouTube channel. Virtual Bacon, Kyle Shass, myself, to name just a few. And these videos did extremely well. And of course they did, because everyone out there wants to find an exact method to be able to select the perfect crypto portfolio that's going to drive me through this bull market and turn me into a crypto millionaire. But there's a big problem with this. The perfect crypto portfolio that was perfect back in December probably isn't perfect anymore. And here comes the biggest issue that you're all gonna face in crypto. Humans by nature like to rationalize every single decision they make, and this comes into building a crypto portfolio. They think that if they can ask someone who's more experienced or whatever than them about their crypto portfolio that's going to take them over the next couple of years, then they're going to be in the perfect situation. But here's the problem in crypto. Crypto narratives play the biggest role in all of cryptocurrency. Therefore, last month, when everyone was talking about Bonkcoin and Cockinu and whatever making massive money from meme coins, no one was talking about anything else. At that time, it would have been great to have a couple of meme coins in your portfolio, but right now, it's probably the worst thing you could do. And that's because narratives in crypto change like the wind. And here's a chart, which you can see over on June.com, Crypto narratives, and you can see the change of narratives from day to day. Like earlier on this year, worst narratives in June were GameFi tokens, and the best were liquid staking derivatives. Roll around to December, Alex Becker rolls in and makes crypto videos, which he hasn't made for literally months before, about coins he's just bought to get a nice pump on them. GameFi season disappears, he tells everyone to sell, and now we're into a different narrative. Therefore, to harness the most success in crypto and your portfolio, you need to be flexible. But I understand that this is tricky. So what do we need to do? Well, in my opinion, it's quite simple. You have your core elements that are going to be building through this bull market. That's why everyone stacks Bitcoin, Ethereum, and a handful of others. The majority of your portfolio should be made up of a solid few cryptos. And that's up to you, ranging from having Bitcoin, Ethereum. You then go into your layer ones, of which you might choose something like Solana or Avalanche or Casper or ICP or Algorand. And there are more available, which I haven't mentioned here. You then look at DeFi, and maybe you want to get into like XRP or XLM or, whatever else. And really, it's up to you. But having 5 or 6 kind of top coins that sort of stick with you for the year or two through the bull market probably wouldn't be a bad idea. Now, well, then we need to understand the movement of the narrative. As I mentioned back in December, we saw the rise of GameFi tokens. And you only need to look into the charts to realize what kind of things are happening right now. And if you'd watched my videos recently, I told you that ETH versus Bitcoin had suddenly flipped and changed. And why is that? Well, because before the Bitcoin ETF release, this was the 7-day trading volume on Bitcoin. You can see 31% of all volume was on Bitcoin and 26% on ETH. Go forward 7 days until after the ETF. Now everyone is presuming that we might have an Ethereum ETF get launched. We see Ethereum at 31.6% and Bitcoin at 28%. What is the result of that? Well, guys, pretty big. Because now we roll into a new narrative surrounding Ethereum, and this new narrative is causing, guess what? The Ethereum layer 2s to go crazy. Therefore, with the remaining portion of my overall crypto portfolio, I lean towards 1 or 2 key narratives that I think are trending now and will continue to trend over the next month or two. Now, as with Ethereum, when we see a move in the Ethereum Bitcoin chart as we flow into phase 2 of the crypto path to altcoin season, I anticipate that anything associated with Ethereum is going to do well, but particularly with stuff to do with liquid staking derivatives on Ethereum. And you're like, what the fuck is he talking about? What's a liquid staking derivative? Well, if you come across to dbank.com, click on more, click on whales. This is all free, by the way, before you're like, oh, sponsored. Then you can come down through the list and you can be like, wow, some of these big boys up here with like billions of dollars are holding like some Ethereum and some other coins. Notably here, we've got Mantle, which I talked about in a video that I made last month, and suddenly we're seeing Mantle wake up. Well, guys, because Mantle offers Ethereum liquid staking. And that's why Mantle is starting to do this, although with a nice little pullback today. MEXC also. But what these platforms do is allow you to stake Ethereum, potentially in the billions of dollars, to be able to earn a percentage reward. Now, some of these might be 7 or 8% in Ethereum, but if you've got like $4 billion, 7% in Ethereum is a lot of money. But you obviously want to be able to use that money in other cryptos. So what you can do is you can stake your Ethereum, and it's liquid staking, because in return you'll get a Mantle ETH or METH token that you can go and use to do other things. That means, say I stake $1,000 to earn 7%, I now have another token in its place that I can go and kind of like trade and do other bits and pieces with while I'm earning money over here. And then if I want to go and take my Ethereum out, I can take my METH back, give it back to the platform, and take my Ethereum out plus the APR that I've been earning. Does that make sense? Therefore, right now, when you're seeing Ethereum taking market share away from Bitcoin, doesn't it make sense that all the layer 2s are going to start popping off? Metis, Mantle, Optimism, potentially Polygon. And this could run for the next month or so. Therefore, with my flexible piece of portfolio that isn't in my kind of solid big gainers, of which Ethereum is one to be fair, then I can kind of make the most of this narrative move. And then I'm already keen on DePIN, decentralized physical infrastructure. Talked about Akash, talked about Render, talked about Filecoin. And if you look into Filecoin, for example, it's barely woken up, which means its narrative hasn't been through that cycle yet. So what we can then do is, say after our layer 2s have kicked off and we made a load of money, we can start to take profits out of our layer 2s that we've been doing well on. So that's why we wait for like a 3x or a 4x, and we pull out some profit, and then we seek out the next narrative. Now, finding the next narrative can be sometimes a little bit tricky, but often you can find it by just identifying where has yet to pump, and understanding what is likely to make it pump would be to go and say, well, decentralized physical infrastructure is going to help to deal with AI scaling issues. As the AI market is growing incredibly fast, it has a huge demand on AI. It has a huge demand on things like cloud compute platforms and other things like that, which is why Akash, File, and other coins like that will start to do very well. Akash has already been doing pretty well, but File needs to wake up, and I think File might be moving soon. So my point of all this is to stop going out there and trying to seek something that is just going to ruin you. Our human mind is pushing us to try and have complete clarity, like be able to pick something that is definitely 100% going to give me the reward that I'm looking for, and look and try and put my trust in other people to give me the answers and find that exact thing. The problem, though, is crypto is not an exact science. What pumps next, what narrative moves next, is very tricky to see until it starts to happen. You've only got to go over to research sites like Messari.io, which is a free website, and you can go and dive through some of these reports. And you can also realize that people whose full-time job it is to work in crypto and analyze hundreds of documents worth of data also sometimes don't really know where the next narrative is. So if you're checking in for 10 minutes a day and watching a couple of YouTube videos and hoping that you have 100% the exact right cryptos at any given point, then I've got news for you. You need to stop being a perfectionist. By being flexible, you have the best chances of success. But taking your entire portfolio and chucking it from place to place all the time is one, going to cost you a lot of money in fees potentially, but it also means that you're going to struggle to maintain focus as this market moves on. Therefore, I recommend having a solid part of your portfolio, of which go watch the portfolio videos that I talked about earlier. I have one that I made in December. Virtual Bacon's got one, Carl Schass has one, and all of our portfolios have maybe like a slightly different take on them, but mostly we'll all focus around that kind of key element of having that core of your portfolio. And then outside of that, the flexible core that is changing. People are moving in different directions. If you come across to Nansen, and you can keep an eye on basically some of the different trades that they're opening up at different times. And I can see that Mubi, for example, is starting to get built up in a lot of different positions. And why is that? Well, earlier on last year, we saw a huge push in BRC20 tokens. We've then seen it start to calm off again, and people now starting to roll back in to BRC20 tokens. And Multibit, from looking at Nansen, is a coin that people were in, they got out of, the price pulled back around 66%, and now people are starting to enter back into it. And here you can see it entered into a perfect buy zone, of which yesterday I picked up a big bag about 0.17. Now obviously go away and do your own research. Who knows, it might keep going lower, but this is quite clearly a nice buy zone if you get down to the 4-hour chart. And ultimately I'm looking for a continuation towards the upside. Now I then have a price target where I'll start to take profits around a 2x or a 3x, and then I'll start to move into other narratives and bits and pieces along the line. Now I'm sorry, this video pissed you off a bit because you came here for an exact breakdown of my portfolio at any given time, but the truth of it, my portfolio right now looks different from how it did last week, and will continue to look different every couple of weeks throughout the next couple of years as I move between riskier assets and Ethereum, not Bitcoin. There's a clue. And various different narratives. Now, this is your next question. Like, well, okay, fine, but I live here, I have to declare all my taxes, and the exchange fees are expensive. Well, the exchange fees are expensive because of this. Most of you are using Coinbase, which has sometimes around 10% fees. Therefore, if I'm trying to make a trade for like $20, I'm losing 10% straight away. I then need like a 20% push, because if I sell it, it's going to cost me another 10%. And ultimately, I have to fight very hard to actually make money by using an expensive exchange, which is why I use MEXC, link down below in the description, which has like a 0.1% spot maker taker fee, and some of the lowest day trading fees in the entire crypto market with 0.01% future making fees. There's over 4,000 different crypto coins available on MEXC, link down below. And as well as that, if you're transferring them off, then you don't need to use KYC or know your customer, which means that every single trade you make doesn't really get registered against you at all, which could be useful if you're making multiple trades. Now, if you're in the US or the UK or somewhere else, you might be like, oh, I can't access MEXC. Well, you need a Nord VPN then, and I've got you covered for that. If you click the link down below, guys, you can get 4 months for free, and then after that it's just $2.50 per month. And that means that you can change your location to anywhere else in the world. So say I'm sat in the UK right now, which I am, then I could say I'm currently in Spain if I can't use a website that I want to use in the UK. And it protects me from people spying on my wallets and my crypto trading to keep me safe. Now, guys, with any exchange, whether that be Coinbase, Binance, or whatever, you shouldn't be leaving funds on your exchange. So what I would be doing is using the exchange to change funds, and then you can move it out to MetaMask, a phantom wallet, or like I use a hardware wallet from Decent. Now, Decent is one of the easiest crypto hardware wallets out there. It works with a fingerprint scanner, which is very cool, and has around 3,000 different tokens available. Don't leave money on any exchange out there, because we all know what happened to FTX. Ultimately, you should be using multiple exchanges with hardware wallets, and as well as other wallets like MetaMask, Phantom, etc. Just by connecting your hardware wallet to an exchange, that makes life extremely easy. So if you want to pick one of these up, guys, go through a link down below in the description, and you will also get a discount and support the channel. Guys, I hope you enjoyed that video. If you did, hit the like button. If you're new to the channel, then make sure you subscribe, and I'll see you in a very next video. Bye-bye.